$1. That is Elon Musk's annual salary at Tesla. $1. And he is worth $200 billion. That is not a glitch. That is a financial strategy. And today I am going to give you every rule behind it, 7 of them, with the exact application for your own money, starting this week. Let's go. Before I give you these rules, here is what you need to understand about Elon Musk. He is not just rich, he is financially deliberate. Every single decision he has made with money, from his first company at age 24 to today, has been documented, public, and traceable. Which means we are not guessing what he does. We know. And what we know reveals a financial philosophy that contradicts almost everything the average American is currently doing with their money. So here is what we are covering today. 7 rules. Real examples from Musk's actual decisions. And at the end of every rule, the American application. What you do this week, at your income level, with what you have right now. Rule 1. Rule 1. Never work for money. Own things. Here is what Musk actually did. When he founded Tesla, he could have taken a market-rate CEO salary, millions of dollars per year. He took $1, not as a sacrifice, as a financial strategy. Because a salary is taxed as income, up to 37% at his level. But equity, ownership, is taxed differently, compounds differently, and grows differently. By keeping his equity instead of drawing a salary, he aligned his financial outcome entirely with the company's growth. When Tesla grew, Musk grew. Not because he worked more hours, because he owned something that kept growing. Here is rule 1 for you. Stop optimizing your income. Start building your ownership. That does not mean quitting your job tomorrow. It means asking, what do I own that can grow without me? A side business. Investment accounts holding assets. Rental income. Equity in your employer through stock options. The shift from income thinking to ownership thinking is the foundation of everything Musk has built. Rule 2 is where Musk does something with risk that most Americans find terrifying. And it is the reason he could afford to build SpaceX. Rule 2. Bet everything on yourself first. Here is the documented story. When Musk sold PayPal in 2002 for $165 million, most people expected him to diversify, buy a house, invest safely. He put $100 million of his own money into SpaceX, $70 million into Tesla. By 2008, SpaceX had failed 3 rocket launches. Tesla was 6 weeks from missing payroll. Musk himself was going through a divorce. His personal finances were, by his own description, essentially zero. He borrowed money from friends to pay rent. Most people would have stopped. He did not. And Rule 2 is the reason. Musk has said this directly. He would rather put everything into something he believed in and fail, than play it safe with money he earned and wonder what if for the rest of his life. The American application of Rule 2 is not put your life savings into a startup. It is, identify the one thing you believe in most, whether that is a skill, a business idea, or your own professional value, and invest your resources into it before you invest in anything else. Your greatest asset is your own capabilities. The return on investing in yourself is always higher than the return on any index fund. Rule 3 is where Musk does something that every financial advisor in America will tell you is dangerous, and it is the mechanism behind the $44 billion Twitter purchase. Rule 3. Debt is a tool, not a trap. In 2022, Musk wanted to buy Twitter. The price, $44 billion. He had the money. His net worth at the time was over $200 billion, but he did not spend $44 billion of his own money. He borrowed it. A combination of bank loans, margin loans against his Tesla equity, and investor contributions. Why borrow when you can buy outright? Because Musk understands something that most Americans have been taught the opposite of. Debt, used strategically against appreciating assets, is not a cost. It is leverage. If your $44 billion borrow generates $100 billion in value, the cost of borrowing is trivial. Rich dad. Poor dad calls this good debt. Gates uses it for farmland. Musk uses it for companies. The American application of Rule 3. Not all debt is equal. A mortgage on a property that generates rental income is good debt. A personal loan for consumption is bad debt. Learn to use the first type. Eliminate the second type. Rule 4 is the one that changes how you look at your payslip, starting tonight. Rule 4. Your income does not equal your wealth. This is the most important distinction in all of personal finance, and almost nobody makes it. Income is what you earn. Wealth is what you keep and what your assets generate. Musk's income, his salary, is $1. His wealth is $200 billion. The gap between those two numbers is entirely explained by Rule 1. He owns things that compound. The average high-earning American makes $200,000 per year. If that income does not convert into compounding assets, they have zero wealth the day they stop working. Musk's businesses generate wealth whether he is working or sleeping. That is the distinction. Here is the Rule 4 test for you. If you stopped earning your income today, how long would your current asset base sustain your lifestyle? 1 week? 1 month? 1 year? The answer to that question tells you where you are on the income-to-wealth journey and what you need to build next. Rule 5 is the one most Americans will resist the most, and it is the rule Musk lives most visibly. Rule 5. Spend on skills, not stuff. Musk sold all of his houses in 2020, publicly, deliberately, and by choice. At the time, he was worth over $50 billion. He owned multiple properties. He sold them all and moved into a rented prefabricated house worth roughly $50,000 in Boca Chica, Texas. His stated reason? I want to have no possessions. But the financial reason is equally important. Every dollar not spent on depreciating assets is a dollar available for reinvestment into appreciating ones. Musk's relationship with physical possessions is extreme. Most people should not and will not replicate it exactly. But the principle is available to every American at every income level. Before any significant purchase, ask, does this make me more capable? Does it build my skills, my health, my knowledge, my professional value? Or does it make me feel better for a moment and depreciate from day one? Spending on skills and capabilities is investment. Spending on consumption is cost. The more of your spending that falls into the first category, the faster your wealth compounds. Rule 6 is where Musk takes a left turn that most entrepreneurs never make, and it is the financial decision that made SpaceX possible. Rule 6. Build companies, not careers. There is a critical distinction that Musk makes that most working Americans never do. A career is you, selling your time and skills to someone else's mission, for a fixed payment. A company is a system that creates value beyond your individual hours. Musk has never built a career. He has only ever built companies. SpaceX, Tesla, Neuralink, The Boring Company, X. Each one a system, a set of people, processes, and technology that generates output far beyond what any individual could produce alone. The financial consequence, the value of a system is not bounded by any one person's hours. Tesla generates billions in revenue every quarter, whether Musk personally works on a Tuesday or not. The American application. You do not need to build the next Tesla. You need to build the smallest version of a system that generates value beyond your personal hours. A small online business, a rental property, a content channel with passive income, a consultancy where you have built enough reputation that clients come to you. Start building a system today, even at 1% of your available time. Rule 7 is the final rule, and it is the one that makes every other rule possible. Rule 7. The 12-month survival rule. In 2008, the same year SpaceX was failing and Tesla was 6 weeks from bankruptcy, Musk had a rule. He would always maintain enough liquid capital to run his operations for 12 months with zero revenue. Not 6 months. Not 3 months. 12. His stated logic. Uncertainty is permanent. Markets crash. Technology fails. Competition appears. Governments regulate. Any of these can eliminate revenue overnight. 12 months of runway means 12 months of decisions made from security rather than desperation. When you have 3 months of cash and revenue disappears, every decision you make is fear-based. You accept the wrong deal. You fire the right person. You abandon the right project. When you have 12 months of cash, you can wait for the right opportunity. You can pivot deliberately. You can invest during the crash instead of selling in it. Rule 7 for you. At any income level in America. Build your runway to 12 months before you do anything else with discretionary income. This is not the most exciting rule, but it is the rule that makes every other rule possible. With 12 months of security, you can take the risk of Rule 2. You can use debt as a tool in Rule 3. You can build the company of Rule 6. Those are Elon Musk's 7 money rules. Let me give you 3 actions you can take this week before anything else. Action 1. Write down everything you own. Label each. Does it generate income without your time? If yes, asset. If no, check whether it serves Rule 5 or Rule 6. Action 2. Calculate your current cash runway in months. Divide your savings by your monthly expenses. If the answer is less than 6, Rule 7 is your entire financial priority right now. Action 3. Identify the one skill or capability that, if invested in this month, would increase your ownership value the most. Not a course, not a book. One specific capability that makes you more valuable or makes your business more autonomous. 3 actions. 7 rules. This week. You now have the 7 rules. The next question is, where does Musk actually put his money? Because knowing the rules is one thing. Seeing what the world's richest person actually owns in 2026, and the one thing he holds that has nothing to do with Tesla, SpaceX, or any tech company, that is something else entirely. It is on screen right now. Go watch it next.